Hi, and welcome to the channel. I'm Don Singletary. On the channel here, we try to teach beginners, especially, or anyone really, how they can day trade the new Micro Eminis, the 1/10 size contracts that make trading affordable. We'll be talking about that as your next side hustle, trade of the week, and that'll be followed by some tips on trading psychology, all coming up next. Our featured trade for the week, I'm going to be shorting 2 of the Russell Micro Eminis, and I'm going to be doing a day session trade. You can see there from 8:45 until about 9:30 in the market. It actually went up, but when the market opened at 9:30, it's headed down. Now look in the lower pane. We've got trending down at opening, decreasing momentum, and an imminent convergence of that green and red line you see there in the bottom pane. Here's kind of an instant replay so you can follow that again. The market opens at 9:30. The trend is down. We have decreasing momentum and an imminent convergence of the green and red lines down there on the MACD. As you know, I don't like to trade right at the opening at 9:30 because I want to give the market time enough to figure out which way it may go. So I waited till 10 o'clock. I shorted 2 of the Russell 2000s at 2339.80, and I put a stop about $40 up on this. That's the maximum I'm going to risk on this trade. 4 points up is 2343 on that. And I originally had my target price in my bracket order down at 2300. That's probably not very realistic, so I decided I'd move it up to 2332. So now I have my bracket order in effect. I have a target, I have a $40 stop loss, and the market's trading about $20 up for me right now, down around 2337. And remember, I'm short at 2339.80. And I'm 6 minutes into the trade here. And one of the things that I'm thinking about now, I'm trading 2336 now, and I'm going to take that target and move it back down a little bit to 2370. And I'm going to, since I'm about 5 or 6 points ahead now, I'm going to take this click and drag stop order, and I moved it a couple of times here. I was debating and watching the price up top there, 2332 now. I'm $70 up. So I decided I'd put a stop in at 2334.40, which will give me roughly $60 locked in on this trade and no more risk. It's a free trade now. And the market's moving down pretty fast, 2331. And I decided I'm going to move my stop loss order, my stop market order. I'm going to move it again. This time I'm going to go down to 2333, and I'm trading about 2.5 points below that now. So it's pretty close. I may get stopped out on this, but it's early in the day and the market hasn't really established any super strong tendency one way or the other yet. And I'm about $70 up in the trade in under 10 minutes here. So I don't want to give that back. That wouldn't be a good trade if I gave $70 of unrealized profits back. And now the market's coming back up. Looks like it's going to meet my stop loss, and it does. I'm stopped out at 2333.1. And remember, anytime you please, you can pause or rewind a little bit and look at this. I know if you're a beginner, some of those details seem to be happening a little fast, but that's why we have the pause button. And let's go over the trade now. Duration 9 minutes, made $67. Maximum drawdown, hardly anything. Even though I was willing to risk up to $40, I only had to risk $4 on the trade. And risking that just $4 on the trade is not quite right. Let me explain. You notice near the end, you can rewind it and play it if you want. You notice toward the end of this, I became very aggressive with my stop market order. Now, what I mean by that is I put it very, very close to the trading price until I was finally stopped out. And the reason was to stay in that trade, I would have been risking not $40, not $4, but I would have been risking about $75 at the time. And so I moved my stop very, very close so that I was going to get at least 67 of that, and it turns out to be that's what happened. But I did not want that $67 to be at risk. Therefore, I justified my close stop. After all, 9 minutes and $67 up. will go towards building your account up a little bit, and you don't want to give that money away. So what I did with that stop order was I had an unrealized profit at that time of around $70 to $74. I moved my stop down so that I could capture a minimum of $67 of that, so I was really only risking the remaining $7 or $8 I had in unrealized profits. So once again, this is a good opportunity to point out that your thinking during a trade should be, how can I reduce the risk on the money that's on the table? I had $74 on the table. I took $67 of that out of all risk with my stop order, and I was only risking the remaining $8 to see if I could make more money on the trade, which of course, as you saw, did not happen this time. Now in this trade I showed you today, I made a decision to put my stop very close and to lock in almost all of my unrealized profits. Another trader might have locked in $30 thinking he was going to make another $20 or $30 or $40, and he would have put a lot more money at risk than I did. I only had that $8 at risk. Now that was my decision. If another trader did it and he made more money, he would think he was smarter or better, and he'd probably just be luckier. Because if you go with the odds, you know, hope can be a very destructive emotion when you're trading. Hope is not a strategy. Hope involves the fear of missing out, that FOMO stuff, and it'll make you do crazy things. Another psychological aspect of trading is that your last 2 trades will have more influence over your very next decision than do the last 100 trades you've made. That's just the way our brains work. I can remember what I had for dinner last night, but 3 weeks ago or 2 months ago, I can't tell you. That's just how the brain works, and being conscious of this helps you make better decisions. I think maybe the best and the worst thing about trading is that it's a solo sport. You're doing it yourself. So when you decide to take money, you are deciding the consequences of what you're going to risk to make more money or not. And you are the driver of the bus. You're the captain of the ship. You don't have to please anybody, and you don't have to explain yourself to anybody. And if you can learn from what you're doing as you go along and try to remember not to substitute hope or that fear of missing out emotions into your trade decisions, you'll be a lot better off. Always think, how can I protect what's on the table? I hope you'll join the thousands of people who have purchased and read my book that's an introduction to futures trading. Even if you know nothing at all about it, this is the book. It's a starting place to make learning faster and easier. Your consideration is really appreciated. Thank you. If you're a beginner, look for the links below to 2 of the beginners playlist to catch you up so you can enjoy more of the live video trades here on the channel. Everyone, please subscribe so you won't miss the notification of the next new video that'll be up very soon. I'm Don Singletary. I hope every day is a payday for you. And thank you.